So let's take a look at the PSE, the index. Let's see what's happening. So first, we're in a clear downtrend. You can draw a trend line here. Then the index has been making a lot of lower lows recently. So the most immediate support is at the 5.8 level. But then this is just a bigger range actually. So it's not the 5.8 per se. You have that level here, but then if you look at since the pandemic, we got a bigger support range around this area, so around 5.7, 5.6, but then there's this other leg here at 5.5. So if we break the 5.8 level again, if we don't recover above 6k, then 5.7 to 5.5 is the next range to look at. So there's more below that, but then this is going back to pandemic times. So this is too extreme, I think. So immediate level for now is 5.5 to 5.7 if we're unable to retake the 6k level. But does that mean that we're not supposed to invest in the Philippines anymore? Actually, if you look at other analytics, you're gonna see some opportunities, at least in terms of position trading and long-term investing or medium to long-term investing in the market. So let's look at our market signals page here. So these are some of our prime tools in Investa. We've got real-time breakouts here. We're seeing that a lot of miners broke out today. I think this is due to Felix mining suddenly having a significant spike, with gold prices having strong interest this year. Hang on. Okay, so when you go down here, you're gonna see the leaders screen. This is where our system ranks top performers, top leaders in the market. So this helps us identify where we can see opportunities or potential plays in the market. So we can look at these names. So let's take a look at Felix. Solid break here from this point. But I think this isn't just about the gold prices. I think there's probably news on this stock I haven't seen yet, so let's check. No recent disclosures, right? So maybe, I'm not sure if it's about the Silangan mine or something. So okay, from 460, big volume in the last 3 days, solid. So congrats to the holders of the stock. But then we're gonna see some resistances at the 5 to 550 area. So this will be interesting in the next 1 to 3 days. Let's see. But then relatively expensive at 32 times PE compared to other miners. We got APX at 6 PE, but then price structure ain't that good compared to other gold plays. And we got OGP. So this one is more like a subtle, slow-moving play. I think gives high dividends as well, 7% as of the moment. But I think they're gonna give quarterly dividends. So this is something for long-term investors. And it's trading at new high here. Broke past this range and trading at the high. So let's see. This can trend further. And of course, it's all reliant on how gold will perform. So gold is one of the few assets that has been in a solid trend this year. Okay, so that's the main background. And with Trump coming in, all the trade wars happening, AI happening, so gold is one of the, I think it's gaining back its narrative of being a safety asset or a hedge for everything that's happening in the world. So now let's go back. So we got plus, let's take a look at the chart. Wow, so Still big move from the break here, but right now I wouldn't be buying it at this point. Probably we can wait for consolidation of, or if there's some dips near the 30 to 32 area, I wouldn't chase it. Though the volume is really interesting, but I'd wait and see. I'd wait and see how it consolidates from here. But of course, for leader plays, sometimes they don't make a significant dip. So you really have to choose between buying at a high price if you're still confident it's gonna go higher, or you could just wait and have the discipline till it dips. So right now it's not that expensive at 14x, and if there's still growth potential, then this may continue. But then again, I wouldn't suggest chasing, so let's be patient on this. Next, Vita. Okay. Some volume happening here, but then this is speculative stock, but it's trying to break on this channel. So I think if there's really something here, we're gonna break the 70 mark. Then from there, let's see if it can trend higher, make a confirmation move. But again, this is a speculative stock. Okay. AUB, wow. So what we can see here is the cheap banks are following to CBC. Right, so CBC, the China bank, has been a strong performer last year, from 20s, 20, 30, going to 50 and then 80. So congrats to all holders of this stock. I think it goes to show that if you know the fundamentals, not just the charts, you're going to be able to identify like cheap names that have growth potential or are way undervalued. So this is CBC in a consolidation mode. It's recently been added to the index with the big spike at this level, but then I won't chase here. Probably let's see how it's gonna stabilize at 80 to 70. So now AUB, okay, new break. I think this is a new high. Yeah, it's a new high. So from here, you can just follow the trend. And it's still relatively cheap, 5x. So same with CBC back in the early days. So you got a mini breakout here with an all-time high. Next level to test would be 80. So if this is really strong, it's gonna take up 80 with big volume. But at the same time, if you're a fundamentalist, you know that you're still buying into a stock that still relatively cheap, though it's not one of the most famous banks. But I think, yeah, because of CBC's move, the market are looking for the next kind of CBC play, right? So this can trend higher. But in terms of support, if you're waiting for dips, we can wait around 75 to 70 area at this point. Yeah, so let's see. Next Monday. I think this has been added to the PSEi index. But if you look at the numbers, it's losing a lot of money. So I'm not that interested in this. If you're basing on fundamentals, then got a mini bounce. But for me, this would be a sell on rally kind of trade. So 8.15, and you're gonna see resistances at 8.50 to 9. And if there's spikes to 9 onward, 9.50, then I would be trimming my position here. That's just my stance, assuming that there's no game-changing news. So just from the catalyst of just being added to the PSEi. So after being added to the index, if that's just the catalyst, then probably would have a hard time to sustain. So let's see, the resistances is at 9 to 9.50 Monday. SMC. SMC, well, nice dip at 65 and then instant recovery at 84. So SMC. I'm just looking at the historical charts. So, okay. So I think this is a very quiet stock. I think the mother company is relatively quiet, and if you've been just holding this long term, not that interesting. But then, okay, let's just analyze. So in order for this to be interesting, we want it to trade above 90. So take out these moving averages and then sustain above 90 and then 100 onwards. But then as long as that doesn't happen, then this will continue to be a laggard. SGP. So this is the energy name that I think the government fund has invested in, but not in the stock directly. I think on the preferred side. So valuations wise, it's still at 7x with 3% dividend. You can see on the right side. Okay, so we're seeing it struggle a bit at the 12 level. So probably you're gonna see some consolidation within 12 to 1150. So as long as it's above that 1150 range, then it can probably retake the 12 mark. So that's the nearest test. But from here, you want to see it above 1150 and then take out 12 for it to have a chance at higher levels. Then it's not expensive yet, 7x. You get some dividend, though not that high compared to other plays. OGP. Yeah, OGP, we tackled this a while ago. Then Manila Water, MWC. Okay, so recently it has been strong at 30, 31. And now this is dipping. Okay. So I think utilities is one of the utilities are one of the interesting sectors or space to look at in the Philippines. So despite the index going down and down, there are value plays or previously underlooked stocks that are rising. So we see the theme here. MWC is at multi-year highs, right? So they even beat the 2022 high, 2018 high. So that's the context of the chart, right? So it's at a 6-year, 5-year plus high. So now this dip is an opportunity. So whether you're basing on fundamentals or just the concept of Manila Water being a defensive stock, so this may be a good buy on dip opportunity. So we got the first support around this range, the previous breakout point within 30 to 29. That's the initial range. But if you're accounting that the market is weak, the general sentiment of Philippines is not too exciting, then you can be more patient and give more allowance at 28. So that's the two ranges. But then again, when you approach these plays, or when you're investing in these plays, you have the patience, or you can just tranche out. So buy a few at 29, then buy a few at 28, depending on your strategy. So you can accumulate within these ranges. Okay. All right. Jollibee got a recent spike with the news that they're taking out the foreign limit for the stock. 27x PE, 1% dividend. Let's take a look at the weekly chart. Weekly, we're still far from the 300 plus level. Okay. So I think the news is interesting because Jollibee is the primary consumer stock when you talk about the Philippines. But then in the kind of environment that we're in, there's still a lot of catalysts that can spike up inflation. So not just local inflation, but global inflation. And when there's that inflation story, consumer stocks would be the ones to pay for it, right? So though it's stabilizing right now, but if any of the countries get triggered, and if the trade wars continue, they put more tariffs, and other global conflicts, then that can diminish the margins of consumer play of Jollibee, a consumer play like Jollibee. But what's good is that Jollibee continues to be aggressive. If you're buying Jollibee, it's not a local stock anymore. They've bought a lot of coffee chains, other restaurants. They've expanded a lot in the region and then in the USA and other countries. So that's the interesting thing here. So okay, technicals. Let's take a look. Resistance would be at 270 to 280. It's gonna be quite challenging at that level. So if ever it spikes there, you might see some selling pressure. So if you were looking at the dip, probably we wanted to stabilize at 230, 240. So 250 is like the midpoint, right? So if you have the extra patience, we want to see it at 230, 240 for the meantime. All right, let's take a look at page 2, DMC. So with the index pretty much being a laggard in the region, there's some stocks that are interesting in terms of giving high dividends. So we got DMCI, it's one of them, 7x PE with 10% dividend yield. So for long-term investors, this may be interesting to you. And if you're looking at their business, got 34% negative slowdown. Okay, so earnings slowing down a bit on some quarters. Alright, so that's something you have to know. So it doesn't mean that the stock gives a high dividend. It's already good, right? So you also have to see if earnings can stabilize and replicate on the next few years. Because even if you're given 10-15% dividends now, but then the potential of the stock would diminish in the next few years, then that dividend would be offset. So what's good is to invest in dividend stocks, but find stable or growing companies. So as we can see here, it's some of the quarters they experience slowdown, so that's something to be wary of. Okay, but in terms of price action, resistance would be at 12.50. So let's see. That may be a trimming zone for DMC holders. Okay, now page 2 is where some of the interesting names are at. All CBCs, we're done with it. Converge. Okay, so this is one of the stocks that are consolidating at the highs, making a long consolidation. This is relatively cheap compared to its early days. It was trading at 20 to 25x PE. So now it's at 11.4, right? So we have this range between 16 to 18, and we're now at the higher part, 17. So ideally, we want it to sustain. Hang on. Oh, sorry. Ideally, we want it to sustain above 1680 to 17. Right, so from there, if there's momentum in the stock, we need to see a high volume break above 18 plus, and from there we could just trend higher. From there, next resistance would be 1920, but it needs to have a convincing break. So right now we're encountering some sell downs, probably like sentiment driven, since the trading is quite dull right now. But then if it holds this range, then if it just holds this range, 16 plus or 1680, 1670, and then re-breaks 18 with a high volume, then that would be a good sign for the next leg up for Converge. Keeper, very solid trend, just a quiet stock. I think they deal in alcohol or something. I'm not that familiar with the company, but then this is one of the sleeper plays before at 180 to 2, but I didn't buy it, unfortunately. So right now it's still trending high. We're in a consolidation stage at here. So 240 to 250. As long as it's above 240, we can probably see it continue its trend. But I'd be wary if it breaks below 240. Okay, so alright, so we're coming to some dividend plays that I like. So Metro Bank. For me, this is one of the safest blue chips right now. Hang on. Okay. This is one of the safest blue chips right now. At 7x PE, and then you're getting around 6 to 7% dividends. So depending on your strategy, you could be accumulating whether in 73 or as near to 70. Of course, there's always a risk of the price not going to the level that you're waiting for, so you need to be able to adjust or give allowances to that range, right? So right now we're in this range, and then since the market is not yet waking up, you can have some time to accumulate. But then, as you can see here, compared to the index, see the index just going down, but then a name like MBT making a higher low here and trying to break past its range. So you can see the difference. It's not too correlated. It's not following to that weakness. So that means that people are appreciating and seeing this, that it's cheap. It's giving 7% dividends. And then if we take a look at, we take a look, oh my god, wait. If we take a look at earnings, so there's slight growth in there, 11%. So we're not seeing any slowdowns on the earnings. Last year it's 29%. This year in the quarters, in the 3 quarters, it's 11 to 15%. So not bad. So we want to see it later on. We want to see it break past 74 to 75, and can probably, when the sentiment becomes positive, and if it continues to show good quarters, we can probably see it break above 75, 76, and then make a try at 80 if the sentiment of the local markets become good. But since we're not yet there, we can just be patient on this and accumulate within 70. So it's gonna take time, but then definitely this is interesting for long-term investors. SCC. Yeah, so more dividend stocks being appreciated by the market. Got a break. It's trying to break its multi-year high from 2023. So from here it can trend higher. I'm not sure with the coal business, but I think they have other sources of revenue, but coal mining is still the main. But if you just look at the numbers, 7x PE, or we see declining income. So this is just like DMC, high dividend, but then you got declining growth. So that's the risk you're taking here. So short term, it may be appreciated because of the discrepancy or the big value, short-term value in the dividends, potentially 16%. If they replicate the past dividends of last year or last 12 months. But then on the core business side, you got slowdown. So I'm not sure, if I haven't looked at it deeper, if they have like other sources. Alright, but at least on the technical side, it's acting nice. So again, that's where the market is focused, like value plays with high dividends. So basically, and utility. So basically, the market is putting priority in safe concepts. So We got 36.90. Then got a main resistance here, a pocket resistance at 38 to 40. So if this continues to trend the next few weeks or months, take a look at as a selling point on this gap at 38 to 40. Let's see. Okay, LTG. So this is another dividend play. 11%. 4x PE. Earnings ain't that bad. Alright. So earnings is stable or sideways. Okay. So for long-term investors, again, a lot of the dividend hunters, we're seeing it break this range of 1070 to 11, and as long as if this is bound to trend, we want to see it sustain that range. So 1126, there's a dip. If it goes to 11, then around 1080, 1070, we want to see some buying there. We want to see some support there. And if the stock is supported on the dips, then it can trend higher. So again, this is one of the high dividend plays. Like anything 7% or higher is interesting for the market. And at the same time, even if this is like a quiet stock, you can see that it's a very low PE. Then earnings is not negative, so that's a good sign. So let's see. Another stock for long-term investors. AP. So AP energy play. So at 5% dividends. PE ratio is at 9. Then we see a high volume spike on the breakout at 40. So I've been watching this stock as well. So you can see that this is a multi-year high. So again, this is one of the stocks that I've been mentioning that despite the index lagging, you can see that there's some interesting names on the safety side. So utilities, high dividend, low PE. So that's the characteristics of these kinds of stocks, the stocks that we've looked at recently. So now broke out at 40, but then it's at 42. So depending on your allowance, so that 40 to 42 range can be a buying opportunity. You can see here, these are the previous resistances. So it's just retesting that resistance. So if the stock is indeed bullish, then whether we're stabilizing at 41, 42, this 40 to 42 area can be a good buy on dip opportunity, and then wait for it to trend higher later on. But what's noticeable here is you're buying into a good structure just like MBT, but then you also have that backup of a high dividend, of an interesting dividend, and then not too expensive. So same with the LTG, MBT, and the other plays. Okay, Meralco. So this is another outlier. So again, if you look at the index, right, it's been losing a lot of value, but then you see the energy plays. Energy plays still hovering at the high. This is one of the biggest big caps in terms of the energy space. So when it comes to defensive names, right, this is one of the top. So Meralco, AP, MWC. Then we got the other speculative names, the lower mid caps. Well, these are the big plays. So if there's gonna be institutional interest in energy plays, this would be one of the main stocks. But the dividends is not that enticing compared to the other names. So we got 441, below 5. Not too bad, but not that impressive. PE ratio is a bit more expensive than AP. But then what what people are buying here is ITME being the main energy company in the Philippines. At the same time, they're investing into a lot of new projects, so there's growth potential in the future. So structure-wise, it's just a matter of time before we want to see it break above 500. So right now it's gonna struggle because the sentiment ain't that good yet. But when the market gets a more significant reversal, we can probably see Meralco being one of the leaders if it breaks 500. So right now it's probably gonna range. So if you wanna be more patient, 550 to 560. But then if you want to get positioned now, 570 to 580. So these are the two ranges that we're looking at. And then over the medium term, we want to see a breakout of above 500. Okay, last stock, APX. APX. Cheap. This is a cheap gold miner. Yeah, we looked at this a while ago. Cheap gold miner, but then structure ain't that good yet. Gold. There's a big red candle here. But then let's try to hold on. Main support for gold is at this previous breakout level. So can go 2.8 or 2.770 around that range. But then that may be too deep or that may take some time. So let's see, that would depend if this holds above 2.840 to 2.850. So these are the two supports we're looking at. But overall, I think gold still has long-term potential. It's just a matter of waiting and seeing if this is going to stabilize at support 1 or support 2. Alright, so we can pattern that in terms of looking at sentiment on these local miners. But if we're looking at price action, PX is interesting. I mean, it's one of the top. Then OGP, one of the quiet names, but slowly making new highs. And then APX, this kind of weird, low PE, but then the structure ain't that good yet. Okay. And then if you want to take a look at, if you want to have a snapshot of the market, then we got this tool here, the trend strength. You can see from a more visual perspective which stocks are leading. So it's almost the same as our leader score a while ago, where we ranked interesting names. You're gonna see the similar names here: OGP, SGP, SCC, MWC, AP, Converge. So these are the stocks that we reviewed. But then you're gonna see on the visual scale how far they are from each other and which ones are really leading. So it's still PX and plus. Okay, so that sums up our PSE insights for this week. Good luck to all of you and see you soon.